Hey guys, what is up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla stock. Let's go over what has happened to Tesla stock, what we can expect moving forward on a pretty abysmal looking day, down almost 7% on the day compared to the market, definitely a little bit more than the market. Obviously off of the news over the weekend, the long weekend of Elon Musk, pretty much confirming the fact that he's making his own American party, diving deeper into politics, and obviously the beautiful bill being passed pretty much, I think it was on Friday or something like that, Thursday or Friday. And, you know, a lot of issues with that as well in terms of ZEV credits. And it's a whole jumble of a mess for Tesla stock. So the stock, yeah, you know, definitely coming down a decent amount here, but holding some pretty key levels. I'll go over it, give you my thoughts. So if you enjoy, don't forget to hit that like button. This is not financial advice. I am not a financial advisor, but I do share my thoughts with our members every single day as the market is open on the charts and various time frames. For the first tier for just, again, $3 a month. That's all it is. That's the Tesla tier. I constantly talk about Tesla. $5 includes NVIDIA, $7 includes non-Tesla, non-NVIDIA stocks that I share with my members, like CoreWeave recently. What is the other one here? The one I'm talking about, AMD I actually talked about today, Oklo, whatever the hell. You know, things like that. So definitely check it out. And over the weekend, we do membership requests on Discord. So jumping into it, Tesla, yeah, down about almost 7% on the day, closing at pretty much $294 per share. Is yeah, not the most ideal thing in the world. And you know, the question of course is, well, is this a concern? Is the stock back to bear mode? Is there any bullish hope? That's the major question, right? And you know, it's I do think the bearish momentum is definitely kicking in pretty aggressively. Now, every single time, let's just compare some certain situations here, right? So why is the bearish momentum kicking in? Well, again, we went under the channel once again. So we had two false breakdowns and breakouts, right? So one breakout that's false, one breakdown that was false. And then both of them kind of came back into it despite exiting temporarily. But unfortunately, we had another one right now. And unfortunately, unless we get a very large gap up tomorrow, which would be a bullish thing, right? If we get a big gap up, that would actually print a abandoned baby candle pattern. It's a very weird name, but that's kind of what it is, where it looks something like this, right? This would be like the bullish scenario, right? A bullish abandoned baby candle, which is, you know, again, you pretty much have a massive gap down. You have a kind of a doji looking candle, if you will. And then you have a massive gap up, right? And that's kind of the situation that we could form here. Now, that requires a pretty nice substantial even gap up into tomorrow, like above 300 at least. So if that happens, hey, that's bullish actually, or it could be at the very least. But you know, obviously relying on that is, you know, you shouldn't rely on it. You should just only react if it happens. So anyways, moving forward though, we drop below the channel once again, so that's not ideal on elevated volume, right? Kind of like the last time as well. So there is that. But the fact that we drop below the channel again is not good. The fact that we have no MACD still is not great, right? It's still bearishly crossed. We started making higher lows, but still bearishly crossed. We have no stochastic. So there's a lot of situations here that are, you know, haven't been bullish for a while, right? And this is why I've been talking about this, for instance, up here when everyone was bullish because robotaxis started. Everyone was bullish up here, and I kept saying, guys, you know, there's a very real chance, especially the way it looks like NVIDIA, this is a dead cat bounce. And exactly, you know, I mean, those people are pretty quiet now, right? So, you know, people get very excited for that. Now, if this was indeed a dead cat bounce, and if we're still playing out this dead cat bounce, which we very well could be, we very well could still be playing out this dead cat bounce rejection up here, right? That absolutely could still not be fully done just yet. That unfortunately will mean the fact that we most likely go down below 270. And this is my bearish situation. So I'll go over the bearishness first, and then we'll go over some, you know, hope for the bulls, if you will. But the bearishness is the fact that, yeah, we know we are playing this dead cat bounce and we are going lower, and this is just nothing more than a dead cat bounce. And, you know, that usually at the very least implies the fact that we retest this kind of 270 range. But honestly, the chances of us breaking and going lower to about this 230 gap fill over here roughly, you know, especially if you break 270, yeah, it's a very real possibility, especially now the fact that we lost the channel again. We have pretty much no momentum whatsoever in the stock, where we have the exponential moving averages. If I kind of zoom in over here, you can see starting to turn bearish. You can see, right, we already have the 9 exponential moving average crossing below the 50, but to me, it's not fully bearish until both of them cross. We still have the 21 EMA all the way up here, but if the 21 EMA also crosses below the 50, yeah, that's pretty bearish to me, right? That would be really, really bearish. And the reason I wait for both of them to cross to the downside is because you sometimes have false signals. Like here, for instance, you know, where you can see, you know, it crossed bearish here, but the 21 EMA never really got that bearish crossover. So we ended up getting, after that earnings, a nice little pop and rally continuation and blah, 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 you know, whatever. You get the point, right? So that's why I like to wait for both of them to like truly be like, that's not good. We're not there yet. We're not there yet. But and this is why I kept saying Tesla needs either a big gap up for that abandoned baby candle pattern or just a pop once again. And the reason I was saying compared to previous times is because each time we dropped, you know, we had these significant drops, Tesla rebounded very quickly the next day or two, right? So unless we get that again, you know, we are going to be putting at risk exponential moving averages, getting that full bearish crossover. And at that point, there is going to be virtually no bullish momentum in the stock, because then stochastic will be bearish, or at the very least not bullish. MACD will be bearish or cross the bearish. We're going to have this EMA's also going into a bearish crossover. We're losing the channel, and especially if we lose 270, that'll be another red flag. So, you know, that's something that bulls want to avoid if possible. But again, you know, it's not looking the best, I guess is what I'm trying to say. It's definitely not looking the brightest. Now, this is, again, continuing with the bearish thesis. If we do get this bearish rejection, like I said, 270 is going to be that main line in the sand. If we pretty much lose today's low, about 88 roughly, which is, you know, a level of support, this level right here that, you know, of course, was a massive support in the past. You know, we're coming back down to retest that. But if we fail to continue turning this range from back here, that was a major resistance for quite some time, into support, which we're kind of trying to do here, that would be a pretty big red flag. And I think Tesla, at the very least, retest pretty much 270. But again, like I said, losing 270 is where, like, it's like it gets even worse, right? Because losing 270 means we lose this pretty important pivot point down here. Again, we most likely come down to this range to fill this gap right here. And unfortunately, it opens up my extra bearish path, which would be, if I zoom out a little bit further, a retest of this green trend line that Tesla retests every like few years or so. Last time we retested it was all the way back here in December of 2022. Then we retested it April 24, so like almost 2 years later, about a year and a half later. And now we're pretty much, if it happens, let's say sometime this year, like, I don't know, let's say September or October, yeah, that would be another retest also about, you know, about a year and a, almost a year and a half, we'll say, you know, moving forward. So, you know, it's pretty common. The stock likes to retest this green trend line almost every 2-ish years, and we're getting close to that range. So the point is the fact that losing 270 makes this a possibility. It makes this something that I'll start talking about more often. But until then, I'm not going to, you know, blabble about it too much, because there's no reason to mention it until we get signs that the chances of the probability of that occurring have increased substantially. And 270, in my opinion, increases that probability. And the final thing I'll mention, this is where I'm going to start transitioning to the bullish thesis, is if we lose 270 and we come down, like I said, my main target, you know, despite the one down here around 180 becomes a possibility, of course. My main target, though, however, in like a base case, I guess you can say, yeah, about this gap fill somewhere around here, 240, 230, something like that. And the reason that level is also important is because if we take this Fibonacci here, you can still make the argument, despite this short-term bearishness setting up here, the fact that this could, even on the downturn down here, could still ultimately be potentially a higher low relative to the lows over here. You can kind of make that argument because we haven't really made a higher high since, right? So that could be an argument to be made, which, if that's the case that you're looking at, if you take the Fibonacci's from here to here, well, same idea. We have the first level, which is that 618 Fibonacci, which is why the 270 level is so important, is at 270. However, if we lose to 70, well, we go down to the next Fibonacci, which is those green fibs. Remember those green fibs that everyone got so bullish up here, and probably so many people got trapped? But I'm like, guys, this is a dead cat right into those green fibs. Those green fibs are very good at getting people into the opposite position they should be. So in this case, it was a bullish position when in fact it was actually bearish. And in this case, if we come down all the way here, which will be that target to make this correction finish, essentially, yeah, that would be pretty much about the 240, right? The 240s roughly, maybe slightly entering the 230s, but about 240, right? Which is where that gap fill is as well. And I promise you right now, if Tesla comes down all the way here to 240, everyone will be bearish. And all the people that were bullish up here when we were retesting the green fibs to the upside that got trapped are now going to flip and turn bearish once we're retesting the bullish fibs on this potential retracement to the downside off of these lows over here when we were at 215. So that's what I'll be watching for mainly. And I do believe that there's a non-zero chance, I guess you can say, that we make our way down to that range. That absolutely, you know, it is a very real possibility that we come down there eventually. Now, it's not going to necessarily happen tomorrow, of course, but maybe after earnings, maybe sometime in August, maybe even it'll last until September. Like, I don't know how long it's going to take. I'm not here to tell you it'll happen by here, you know, September 23rd at 10:54 a.m. I don't know. I don't know how long it'll take. Maybe it'll happen right away. Maybe Elon will do something else and we go right down to it right away. Maybe we'll take a while and then come down to it. I don't know. But what I do know is if I do see Tesla coming down to pretty much 240 roughly, that would be a pretty phenomenal risk versus reward type scenario on the fibs, on the retracement, on the gap fill, and a lot of situations like that. So that's going to be the main thing I'll be watching for, a more zoomed out approach, I guess you can say. Let's zoom in a little bit though. Let's zoom in. Let's maybe talk about, what to expect maybe, let's say this week, for instance, right? What do I see for this week? Well, Tesla, it's pretty extended right now, despite all the momentum pretty much being faded unless we get a substantial gap up also this week. We are still pretty extended to the downside relative to where the exponential moving averages are sitting. Now, in the 1 hour, they're probably catching up to us, which they are. But the daily, you can see even the 9 exponential moving average is at 314. So what does that tell me? We're pretty extended to the downside, kind of like how we were here, kind of like we were here. We're very extended from even the quick exponential moving averages, like, for instance, the 9 exponential moving average. So in other words, to me, that tells me the fact that any further downside, probably at least for the next few days, maybe even the rest of this week, should be fairly limited. And I'd be very surprised if we actually retest 270 this week. And if it is this week, it'll probably be Thursday or Friday at the earliest, in my opinion, of course, not financial advice. Because again, we're just very extended to the downside. So again, to me, that usually means the fact that either Tesla just pretty much goes sideways here, or it gets a small bounce and it sort of meets the exponential moving averages somewhere in the middle, like let's say in the very, very low 300s roughly, right? And then it catches up to us. And then from there, we could potentially get a rejection off of them and move lower. Let me show you an example of what I mean, right? A lot of people, it might be confusing to look at it in this way. So I like sometimes using examples of other stocks that are doing something that I'm kind of telling you what I think Tesla might do in the upcoming few days, right? Kind of like what Lulu did. You can see Lulu, huge gap down on earnings, absolute bloodbath. And then what did it do, right? Eventually the exponential moving averages caught up, but it also kind of came back up into them. And what did it do? It pretty much came up into them, had a bearish retest, and look at this, nice fall through so far, down another 4%, right? So if you flip the chart, almost like a nice little bull flag, right? Here we go, like this. Nice little bull flag right into the exponential moving averages, and then we go higher. Think of it the same way, but just on Tesla, right? That's kind of what I expect right now for Tesla. So if I invert it, for instance, nice breakout above the exponential moving averages. This is flipped, of course. So you would expect something like a bearish, technically bearish, but in this case, because the chart is flipped, technically a bullish retest, if you will, into a continuation, in this case, higher, but on the actual chart, lower. So again, whether or not this actually happens, nobody knows. But that's kind of what I expect right now, unless we get a large gap up, unless we get back within the channel, make the abandoned baby candle pattern or something of the sort. So unless something like that happens, that's kind of my expected move right now. So that's why I'm personally playing cash secured puts. I don't personally expect Tesla to go much higher, like anything meaningfully higher, like for instance, above 315, 320. I don't expect that to happen. Potentially for a little bit, honestly, right? That, this is damage to the chart. This is damage to the technicals. I mean, this move alone was already damage to the technicals, which is why I was screaming this whole time that this move right here was a dead cat bounce. No one believed me because that's how dead cat bounces work. No one believes dead cat bounces because they're just really good at sucking people back in, right? Very, very good at that. And, well, clearly it was. So that's my current expectation on Tesla stock. But to make it simple, momentum from the bullish perspective is dying. We could get a short-term oversold bounce, or at the very least sideways action until the exponential moving averages fully come to us as well, or we just kind of meet in the middle roughly. But I do expect that unless we get a very large sizable bounce pretty much within the next day or two, we most likely have now entered bearish momentum for the stock. Nothing is suggesting me the fact that it's bullish right now. Pretty much nothing at all, arguably. So I would expect at the very least a retest of 270, break 270. I would expect the green fibs of around 240, which could be an actually pretty good opportunity. Worst case scenario will be 170. That's pretty much it. I mean, there's not much more to say than that, right? That's kind of what I see right now. So again, let's see how it goes, guys. Let's see how it goes. Yeah, I don't know. I mean, I avoided pretty much all this pain, so I'm happy about that. I've been in other stocks. There's a lot better opportunities right now than Tesla stock until it shows something worth trading. There's nothing really worth trading here other than cash secured puts, which is what I'm in right now. I entered cash secured puts this morning. Again, mainly because I don't expect the stock to really rocket anywhere too high, like maybe best case, like 305, 310, best case scenario. It's kind of what I expect right now. But, if it just goes sideways while it waits for the exponential moving averages to catch up, that's fine with me as well. So I'm just not very confident in true upward momentum for the stock to head anything meaningfully higher. And I mean like meaningfully higher, like well above 320, well above 330. I just don't see that happening for potentially a little bit here. But I'm also pretty confident short term, at least for this week, we're probably not going to go much lower than 280 and especially 270. Not this week, at least. I'd be very shocked about that. But hey, you never know. Anyways, thanks for watching. See you tomorrow. Peace.